Well, you're listening to the Promise of Place podcast, the official podcast of Avenue CDC, where we explore ideas, stories, and solutions shaping housing, affordability, and community development in Houston. Each episode is going to bring you practical guidance, expert interviews, and real conversations with community partners who make our vision thrive. At Avenue, our mission is simple. We want to strengthen neighborhoods, create opportunities, and expand access to safe, affordable housing for every family. I'm your host, Michael Carpenter. Thanks for joining us, and let's go ahead and jump into today's conversation. So today, we are going to be talking with Marcus Vazquez with Stellar Bank. We're going to be having a conversation about the tools that are in our tool belt for housing affordability, and how Stellar is using their resources and their products to help create affordability in Houston. So thanks for coming on, man.
Oh, absolutely, man. Good afternoon, and happy Thanksgiving.
Yeah, absolutely. Excited to eat some turkey next week.
Absolutely.
So for you, would love to kind of hear a little bit more of your background, kind of what your role is, what you've accomplished so far, and then we'll kind of keep going from there.
I appreciate it. Well, thanks for having me today. Houston's home. I'm a Houston guy, born and raised. Been here my entire life.
Nice.
Went to school on the northwest side. My parents grew up not too far from here on the east side, the Denver Harbor, 5th Ward area.
Okay.
Graduated from Jersey Village High School. Went to Sam Houston State.
Okay.
Really didn't know what I wanted to do when I grew up, right? What I was going to do as my career.
Yeah.
And luckily found some guidance through a professor that I had, and kind of fell into banking. Banking growing up was never an idea.
Yeah.
No kid grows up and says, I want to be a banker.
Yeah.
But no, he plugged me in. I went through their banking program there. I ended up going to work for the U.S. Treasury Department, for the Office of Thrift Supervision at the time that was responsible for regulating all the savings and loan chartered banks in the country.
Okay. So
a lot to do with the mortgage industry. But yeah, he just kind of was like, hey, Marcus, you ever thought about being a bank examiner? I'm like, absolutely not. But it's a job, right? And my parents are like, hey, get a job. Yeah. So graduated, went to D.C., did a lot of training out there. Was stationed out of Dallas, or say stationed. It was located out of Dallas. Yeah. Moved back to Houston, and So now I work for, switched over. Okay. Went to the private side. Okay. Kind of took all my skill sets and knowledge and experience that I learned on the regulatory side examining, and now I can apply that here on the private side, so working for financial institutions.
Okay, nice. What about affordability and kind of the housing industry attracts you to that, right? And so with your current role, I know you work with the CRA program at your bank and kind of really helping low to moderate income families, helping small businesses thrive. What kind of has fueled your passion to work in that part of the industry?
Oh, absolutely. That's a great question. A lot of people, when they think about banking, I don't think they really think about community reinvestment, right? I think they look at it from a perspective of, I earn money, I deposit it at the bank. When I need to borrow money, I'll reach out to them. But I don't think the everyday consumer or person really understands that banks are actually required to lend, invest, and provide services back to the community. So I really find this as that one unique part of banking in which you can really make an impact in the community. And being from Houston, I really love to see that the bank, that Stellar Bank, is lending back into the community, investing, providing services. Yeah. Especially when we start talking about low to moderate income areas, right? From a CRA perspective, we look at it.
Can you actually explain what that means? I know that's something that I've been trying to get better at, not using industry jargon.
Yeah,
so
no, absolutely.
Can we actually break down what is CRA, what is Community Reinvestment Act? Yeah.
Perfect. So the CRA is the Community Reinvestment Act. It was enacted in actually 1977, I believe. Don't quote me on that. I believe it's 1977. Yeah. But it's gone through some changes over the years, right? Because the 70s looked nothing like it does today. Yeah. But one of the reasons why CRA was enacted was because of issues that we were seeing from a lending perspective. Right. So if you take a community and you take all the deposits from the community, but you don't lend back into that community, it kind of, a lot of this falls in line with what we see from a fair lending perspective and from a redlining perspective. But you can quickly kill the community essentially from an economic perspective if you don't provide financial resources back to it. So from a Community Reinvestment Act perspective, our financial regulators, they'll take a look at us on a regular basis, and they'll evaluate every institution in the country on how they perform from a CRA perspective. So they will review our lending, they'll take a look at our investments and our services. Those are the three components that we fall under because we're a large bank.
Yeah.
Now, when they look at our lending side of it, they'll look at our level and distribution of our mortgage loans to low to moderate income communities and directly to low to moderate income borrowers. They'll take a look at our small business loans, and they'll say, okay, how many of your loans, Stellar Bank, are going to businesses with revenues of $1 million or less? And on the services perspective, they'll look at it from a retail test, and they'll say, okay, where are all your branches located? Are they in low to moderate income communities? Are they easily accessible to low to moderate income communities? And also, are you providing your services back to the community in a sense of utilizing your subject matter expertise and credit to assist potential home buyers? Are you doing services that could benefit the community? So
and when we say low to moderate income, how do you guys determine, what is the determination on that? Is that based on how much money they make a year? What is that typically?
That's a great question. So when we say low to moderate income communities, that's actually determined by the federal government, by the FFIEC. You could take any address in the country. You could take the address that we're at now. You can go to their website and you could input the address, and it'll actually pull up a map in the geocoding system, and it'll indicate whether or not that census tract is considered low, moderate, middle, or upper. And when you click on it, there's a little box that'll come up like an info box. And it'll give you all the demographics in that census tract, and it'll give you the median family income in that census tract. And if that median family income falls at 80% or below of that average, then that's considered moderate. If it's 50% of that, then it's considered low. So to your question, the government determines all of that. And take what happened here in the Heights. I don't know if you're a native Houstonian, but the Heights back in the day, Midtown and all that that did not look like the way it does now. So you get these communities sometimes that a lot of people don't even realize are considered moderate income because of the way that they actually assess that entire census tract. So, but with that being said, what I love about the part of my job is that we get to work within these communities to help create new housing, to help create jobs through our small business lending. And that's the purpose of CRA, right? Because when they look at our branch distributions, they don't want to just see a financial institution with all of their offices located in upper income areas. They want to see, are you easily accessible to all the communities that you serve, right? You don't want to have nothing but your offices in upper income spaces, but you're taking deposits from low to mod, taking them from middle. So they like to see a distribution across the board. And with that, it provides a lot of opportunities for us to get in these communities and, like I said, help create housing.
I love that.
Opportunities.
So, another thing, as we talk about, I think that the media and people's perspective, I think, plays a lot into how people understand affordability in housing, right? And I think a lot of it isn't necessarily always grounded in the reality of the situation, right? A lot of people may think that they can't qualify for a loan when they probably can, and there are programs out there because of some of these CRA things or some of these, programs that the cities or banks or counties have, right? So a lot of it's education, people knowing what resources are available to them, and that being able to counteract the narrative per se. And so I want to kind of talk a little bit about that in terms of kind of national media. What's being big right now is the 50-year mortgage, right? That's something that the Trump administration has kind of thrown out there. It's a potential solution to affordability. What do you think about that? Do you think that's real? Do you think that could actually impact people? Do you think that's just like pie in the sky? What are your thoughts on it?
Well, it's definitely real, right? So it's out there. They have this new 50-year mortgage concept. And I'm going to throw out a disclaimer. I'm just speaking on my opinion, not that of Stellar Bank, but just from a banker's perspective. I've been in banking for a while now, about 20 years, and it's scary. Honestly, in my opinion, it's scary. And the reason I say that is because I think it could be a useful tool, but when you start thinking about the concept of why people buy homes, it's because they're trying to create wealth and equity for themselves and for their family, right? So when you take a product that's typically, historically, most popular has been a 30-year product, and you almost double that, you really got to take a look at what did it do to the payment. And, you know, maybe it saved you a couple $100 on the payment, but when you take a look at what that payment is actually doing to the principal balance of your home, most of that's being taken by interest, right? So you're not building that equity fast enough to build the value into your home that you really think why you intended to get the home, right? Now, I say that, and that's, to me, is the downside. I really don't think you should extend anything out too far just to afford it, right?
Right.
Better option may be to find a lower priced home, or to maybe wait a little bit until you can increase your income or reduce your debt so that the numbers work.
Yeah.
But, you know, one of the things that I do see that could be positive about it, right, is if and it's not going to be the best fit for everyone, and it shouldn't be a permanent placement. I think if you're in a position to where you're trying to get into this home with you and your family or yourself, and you know that right now the only way I can qualify for this house is that I have to stretch this term out to 50 years.
Yeah, to lower your payment.
To lower my payment. However, I know that my condition is possibly going to improve over the next 5 years. So maybe you're brand new to a career, and you know that, hey, look, 5 years into this, I'm going to increase my income by X percent,
right?
And I'm going to be able to easily afford this house. I think if that's the case, and you're on that kind of trajectory with you and your family, that, you know, I'm going to be able to improve our position, or maybe it's not increasing your income, but you're drastically going to be able to reduce your debt to where you can free up some cash. I think it's going to be very important that people look at this as a temporary option, almost as a door. It got me into the home,
right?
But 5 years from now that I have, you know, more equity into the house, now that I'm in a better position, let me refinance this house and let me get back into a 30 or a 15-year mortgage.
Right.
It got me into the door.
Right.
I got my house where we wanted to be, but let's be honest. Do you want to be in this for 50 full years?
Yeah, and I think the average person is in their house for maybe 5 to 7 years.
Exactly.
So realistically, I don't know how many people would actually go the full 50 term.
Exactly.
So I like that your perspective on it is it's potentially a stopgap, kind of. It's a temporary solution,
it shouldn't
potentially, and it may not be for everyone. It may not be a temporary
Yeah.
solution, but for people who might be kind of on the fringes of the affordability conversation, that could help them at least get into the game. And as long as they have good financial discipline, they're on an upward trajectory, they have a great strategy, right?
Absolutely, and you have to have a plan going into it. And I just really hope that if there are institutions out there that are going to be promoting a 50-year mortgage, that they take the time to talk to their clients about that. They talk to their applicants about that, to say, hey, look, here's really the cost of a 50-year mortgage. Now, we can utilize this as a tool to get you into your home, but this shouldn't be your it. Like, you need to have an exit plan. So let's talk about 5 years from now, 3 to 5 years from now. How can we get you back into more of a traditional product around that, 30 or 15-year product? Because we want you to build equity. We want you to really be able to take advantage of the benefits of owning a home.
Yeah, exactly.
If all your money's being thrown in interest, well, then you're not going to be able to take advantage of those benefits.
Yeah, and I think that's a really good point in terms of when you're buying a house. I think really any kind of housing, whether even if you're renting, right?
Yeah.
Being able to understand, like, where are you at in your life? What are your goals? What is your midterm goals? What are your long-term goals? And just being able to understand, like, hey, where are you at in that process?
Absolutely.
Because for some people, where you're at in that process may not be homeownership, right? And I think sometimes, people try to villainize renting, and I understand, like, if you're in the housing space, you want people, we're pro housing. Hey, I'm 100% pro homeownership, right? I understand it's not for everyone at every time, right?
No, it's not.
So, or at the time of, what kind of mortgage you get, what kind of house you get. And so I think just helping people understand the timing and just being able to, hey, can I zoom out and look at my goals? Like, what am I trying to accomplish? Like, what's important for me and my family at this time?
Absolutely.
And so something that I've kind of been thinking about when we look at, new construction versus resale homes, I think there might be opportunities for people who are getting older homes, right? And maybe being able to fix them up,
Absolutely.
or being able to add value. We call it force equity into it, right? And so talk about that, because I know you guys at Stellar have some products that maybe help people.
Yeah, absolutely we do.
Do you think that's a wise strategy? Do you think people should try to maybe go for a new construction house, or do you think maybe getting a really affordable older house that you can put work into might be a strategy for people?
I think, actually, I think they're both great strategies, and I appreciate it, the opportunity to talk a little bit about the bank's product, and drop in a shameless plug about one of our products. But that is a strategy that we've seen become more popular over the past few years. The cost of construction has been high. Interest rates have been higher than what we've been accustomed to over the past, I would say, probably 8 years or so. I mean, back in the 80s, interest rates were, they're 15, 20%.
Yeah.
It was a different time.
Yeah.
I think us as, just a general public, we've become kind of spoiled thinking that, that 2 or 3%, that just was not normal. That just was not a normal time. So now that we're starting to see it dip in the sixes and hopefully continue to come down more, it'll become a little more popular now on the mortgage side. Hopefully it picks up. But during this time of high cost, we had clients and applicants come to us with that same thought, was, look, I thought I wanted to buy a new house, but right now the cost of insurance, cost of housing, it's just too much. So I think we're going to stay in our home, and we're going to add an additional bedroom, or we're going to expand the kitchen, or we're going to make it what we want it to be. And we do have products that can assist with that, right? So because of the situation that the kind of housing market had been in over the past few years, and really wanting to assist low to moderate income communities and borrowers, we created what we call the CD Hill product. It's Community Development Home Improvement Loan.
Okay.
And what that actually is, if you live in a low to moderate income census tract, or you're considered low to moderate income by your family's income size, then you can apply for the product, right? So another way to think about it is, if you make $200,000 a year, but you live in a moderate income census tract, you can apply for the product.
Nice.
If you make $50,000 a year in a middle income census tract, or an upper, you can apply for the product. But it has to be owner occupied. It can't be for rental property, because we want it really to benefit the consumer, and not use it for small business purposes or commercial purposes. But so what it actually is, it's 2% for compliance reasons, 2.003%. Fixed up to $25,000 for 15 years, no closing costs.
Nice. Okay.
So we'll take care of the appraisal, we'll take care of the closing costs, and when you really break that out, it becomes very affordable over a 15-year period, and we're starting to see it gain some traction because, like I said, because of the situation that the housing market's in. It's high right now.
Yeah, sometimes people maybe can't even afford to sell their house, because where they would go to next, maybe it's, they need more equity in their house, or whatever situation.
Absolutely.
So it maybe make more sense for them to upgrade where they're at, add more value to give them either more value in their house, or just give them more time in the house and make it more
absolutely.
what they're looking for.
And it's Houston, Texas. It's hot, man. It's hot, and we're on the Gulf Coast, so we're kind of prone to natural disasters. So if someone wants to use it they need a new HVAC, they need a new AC unit at their home, they can use it for that.
Yeah.
If they want to put in a Generac or any type of generator system in their house, because of storms and what to expect here, you can use it for that.
That's awesome. What do you think is, in your experience, or with the bank, or just personally, where do you think some of the best investments are that you can make into your house? I've heard putting a swimming pool sounds awesome, but really doesn't necessarily change the value of your house all that much. But are there other areas that you think somebody could leverage that $25,000 to really make an impact in their equity?
Yeah, absolutely. That's a great question. So you're right. Swimming pools typically are not the best investment. It's like throwing your money into a pool, because you have monthly costs associated with it, right? You have to keep it clean. It's work. You have to buy the chemicals or the salt or whatever it is. So it's some people that really aren't interested in all of that. They don't want to deal with that. So that might be a deal breaker for them. A family may enjoy it, but they always say, don't ever expect to get your money out of your swimming pool. Like, think of it as, instead of
entertainment.
It's entertainment.
It's like
right?
gambling, right? You're just kind of like, hey,
It's
this may help, but
yeah.
most likely this is just for my fun.
It's for fun, right?
Yeah.
So if that's your fun on the weekends, and you want to swim and hang out and grill, or instead of going out and spending money, it's one way to think about it. But some of the things that could improve the value of your home are any upgrades you can make, right? If you can upgrade your kitchen, if you can make sure your HVAC and your AC are up to date, adding an additional bedroom or expanding it, or upgrading your bathrooms or adding an additional bathroom. Anything that you can do to add value to that home is probably the best way to think about it. Making sure that you have and another way to think about it is protecting that asset, right? Utilizing a home improvement loan for doing some deferred maintenance, right? We talked about AC units. Those are good for
like your roof.
Yeah,
I mean, the roof is a big one, specifically in Houston, because it's already the insurance part of the equation. It's already such a major impact. So if you have an old roof, you're talking about higher insurance costs. So if you're trying to sell a house, you're trying to buy a house, if there's an old roof, that's impacting everybody, right?
Yep.
So being able to maybe invest in a newer roof,
that's a good point.
And
we've had applicants actually reach out to us for the product for that reason, because right now, we talk a little bit about how banks are regulated. I'm not sure how insurance companies are regulated, and I highly doubt they're regulated as tightly as financial institutions. They have a lot more discretion, right? They can, look at your home and say, you know what, you've been a customer for 10 years, that's great. However, we're not renewing this policy because your roof needs to be replaced, and they can drop you if they determine that that's the case, and there's really nothing you can do about it, right? And if you have a mortgage on that house, it's not an option. The banks are going to require that you have homeowners insurance. So I've had customers reach out to us to say, hey, look, can I use this for a roof replacement? I got a quote on it, and it's going to cost $18,000 for a roof replacement. I'm like, absolutely, absolutely. And what that does is it protects your home. And we've had clients reach out to us to get this product actually for maybe their older parents, right? Because the family's been, or that house has been in the family for years. They've held on to it, and they want to keep that generational wealth within their family, but it has a lot of deferred maintenance. Okay. So a lot of the times, investors may be knocking on their door saying, hey, look, sell me your house, it needs work. And sometimes some of our older population may look at it as, well, you're right, let me sell this because I can't keep up with it anymore. I can't afford to keep up with it. So you can utilize this type of product to make it affordable for the family to keep that asset, keep that home, and to be able to pass that on to next
that's
generation.
So good. That's such a great tool to be able to use. And
I
was talking about in this environment, the more resources you have, the more education you have, more better understanding you have of the current market conditions when it comes to housing. It just gives you more options, and obviously more option gives you a better chance of finding something that works for you.
Absolutely. If anybody has any questions about that product, our home improvement loan, just go to our website. It's out there. Or reach out to any Stellar Bank location and ask for someone on the mortgage team. They'll definitely help
you with that.
Yeah, definitely help you and know about that.
So something that you guys at Stellar, I think, have kind of niched into is really supporting builders and with commercial loans and stuff. And I think that's really important because the more product we have, that really kind of helps create downward pressure on pricing, right? And so we're talking about affordability right here, and I think some builders, obviously, those guys want to make money, right? So they obviously want prices to be higher and they make more money. But in terms of helping more people, more families get into housing, I think that's something that's unique to Houston.
Absolutely.
And just being able to have so many people coming here because of the work opportunities, international presence here. So talk about kind of how Stellar is helping the affordability issue by empowering builders to build affordable housing. So talk about that for a little bit.
No, absolutely, that's a great point. And to your point, Houston's booming. It's population's grown. People have moved here due to the economy. We fared well pretty much over the past few years compared to some areas of the country. We've managed to keep stuff relatively affordable compared to some parts of the country, and people are attracted to here. The traffic can attest to that. It continues to get worse every day. But no, all joking aside on that. So yes, Stellar's been very involved with development on the construction side. It's I would say it's kind of by design. You know, we're a full service financial institution. We make all types of loans on the consumer side, but we're very strong on the commercial side. And we have relationships with builders from all sizes, right? So we work with builders that, you know, are building communities at a time. We work with some of your smaller, I would say more boutique type builders that maybe they just, you know, they're doing a little pocket community of, you know, of 4 to 6 houses, and that's what they specialize in. And we also work with builders that are actually CDCs or community development corporations.
Yeah.
Or they're nonprofits and they're partnering with a for-profit developer. But in the area that I tend to focus on primarily would be that affordable housing space, where the builders that we work with primarily on my side would be our CDCs and our nonprofit partners. We've done several deals recently where it's a collaboration, really. So if in all reality, in order to make something affordable now, especially in the city of Houston, you have to have a few different players, right?
Okay.
Typically, either the city's involved or some type of municipalities involved, to where they can either provide, you know, the dirt or the lots at a discount.
Okay.
Or they're going to assist with the infrastructure around that community that we're trying to build. And you have to have it because the cost of construction is so high.
Yeah.
And on top of that, to get someone into the home, you know, right now down payment assistance is huge.
Yeah.
So it's really taking everyone to work together right now to create affordable housing.
Yeah.
And we've been working a lot with some of the smaller builders that are working, you know, with the city of Houston, or you know, they may have a contract to build, you know, 5 houses at a time or 6 houses at a time. And typically with those types of relationships, there's a cap, right? City will say, look, we'll provide the lot or the infrastructure, but you cannot sell these houses for more than, you know, $220 or $250 or whatever that agreed upon amount is. So the builder really needs those subsidies because they have to build, you know, within that space, and they still need to have a profit margin, right?
Yeah.
They can't build it for free.
Yeah.
So it's really taking everyone to work together to really, even from a banker's perspective, understand that space and have knowledge around how these relationships work.
Yeah.
And where the bank can come into that.
Yeah, that's so good. Yeah, and I love that that's kind of a creative solution, being able to bring in those public-private partnerships to kind of make some of those things
you
happen.
have to have them now.
Yeah.
You
guys have to be able to understand that, to be able to support those builders through that process.
Absolutely.
Right? So I love that. Are there any other creative solutions that you're seeing on the commercial side of things that are being leveraged to kind of help out with this issue?
You know, there's some cool stuff out there right now, and I think everyone right now is kind of in that creative mindset. Everyone's trying to think of, you know, what's the next affordable home that we can replicate and have it be sustainable. Is it the tiny home concept? Is it the container home concept? Shout out to Vanessa Cole, a friend of ours. She's done a lot of good work here in the city of Houston. She has a really cool community right now that she's building using 3D printed homes.
Yeah.
And I think that's just so amazing because, you know, considering Houston's climate and what we have to deal with the, you know, the storms and the humidity and everything else. And then at the pace in which they can build these is awesome. So I believe it's the community's called Zuri Gardens.
Zuri Gardens,
here in Houston.
Yeah.
So I had a chance to check out some of the videos, and you know, seeing this machine just put up these walls is amazing. So shout out to her with her innovative thought. But that just kind of goes in line with, you know, what concept works. I've seen partners that we've worked with over the years over in the Acres Home area. They created, you know, everyone talks about their starter home. A friend of ours, Mr. Bergley, he came up with like this, he called them, instead of starter, like half step, right? And they were smaller homes. And the way he designed these houses with, you know, his wife, they were so careful on every square foot of that house. No wasted space. How can we save? Let's use, you know, split units rather than, you know, having the traditional HVAC. And it's just really a way to think of how can we help families obtain home ownership and start building that equity.
Yeah,
so
that's awesome. Yeah,
it takes a collaboration of people, and you have to think outside of the box. And sometimes from a bank's perspective, we have to talk to some of our lenders about it, and not every bank is going to have that appetite, right? Banks have different I guess credit portfolios and risk appetites, and not even risk appetites, but maybe just subject matter expertise. They just may not be comfortable in it. So I think it's very important as you're out there looking for, opportunities for home ownership. You look at a lot of different banks, find out, who specializes in what, who's offering what. Like I said, we have that 2% product on home improvement. That's a really good deal. Another bank may have a better deal on a 30-year. So it's just, I really encourage all homeowners when they're looking to home ownership, do your research.
Explore your options.
And get a good agent that's working with you. Hire a good agent. Have them earn that commission, and they're knowledgeable of the banking industry and who's offering what. So and just you're not in it alone. And if you can qualify for down payment assistance, definitely look into that. And another strategy I would encourage homeowners when you start talking to banks is, instead of going straight to like a lender, ask if you could speak to someone on the CRA team. A lot of people don't think about that, but a lot of our CRA people, our community development people, they're very knowledgeable of what we have to offer. They're knowledgeable about down payment assistance, where to find it. So a lot of times that's a good starting point, and then they can plug you in with a lender also.
That's a really good gem, because typically when you walk into a mortgage company or a bank and say, hey, I want to buy a house, you're going to meet with a mortgage officer, and that mortgage officer may not necessarily be attached to or have knowledge of that bank CRA product. And I don't know how Stellar is, but sometimes the CRA products, CRA teams aren't very big, right? Because banks don't, it's designed to be able to help the community, so it's not necessarily the most profitable aspect of the bank, right? And so sometimes you may not even necessarily, have a lot of people out there who know about it. So I think being able to, that's a good point to ask that question.
Because a lot of times that down payment assistance money, you have to be very familiar with the programs. I mean, the city offers programs, the county offers programs. Another shout out to the Federal Home Loan Bank of Dallas. They do a really good job with their down payment assistance programs. But you have to know about the programs, and a lot of the times that knowledge is with the CRA team. So that's just one option to take a look for.
We talked about kind of collaborating. We talked about knowing your options. HomeFest is coming up, and that's something you guys are going to be participating in. We rescheduled for April 11th. It was going to be around this time actually, and we'll be doing it in the spring of 2026. Why is it important for you guys to be a part of events like HomeFest, and how are those tools in the affordability picture for people?
That's a great question, and I really think, well, first off, shout out to Avenue for all the work around HomeFest. I think it's great that we get to have that opportunity to help a lot of people. And so, if it's Avenue or another organization, Stellar Bank likes to be on the forefront of that, because it's home affordability is such a huge challenge right now. So any opportunity that we have to partner with organizations to promote affordable housing, we're definitely going to support it. So whether it's financially through contributions, or it's getting our people involved through volunteerism, or talking with organizations about establishing a line of credit to build these houses. There's a lot of different ways that we like to try to plug our resources into it, but from my perspective, from a CRA perspective, it's huge. Opportunities like HomeFest, where we can highlight the importance of home ownership and affordability.
It's a show of strength specifically for Houston to be able to say, listen, these are all the people who want to help, right? These are all the people who are trying their best to bring resources to fill the gap. And so to me, I think that's why I love it. And for the viewer, HomeFest is a home resource fair that Avenue does every year to help current homeowners, prospective homeowners. We connect you with every single vendor or aspect of the home ownership process, from insurance to lenders to the city. I mean, all the different organizations that are there to help you. We bring them all to one spot, and it's a festive environment. Food, games for the kids,
it's
festive. It's just fun for people to be there, right? It's not just throwing a bunch of information resource fairs at you. It's like, hey, bring your family out, have a good time, and connect with people who want to help.
And I think that's important, because these types of events, yes, they may be geared towards adults, but not necessarily, because I really feel like our younger generation, they really need to start thinking about this early on. Being prepared, put yourself into a great position. 18 comes quick, right? 18 gets there quick, and you can have the opportunity to start your financial path on a good trajectory where you can plan for home ownership. Those credit card companies, they come at you quick when you turn 18, right?
Absolutely.
So there's an opportunity for you to make some good decisions or to make some bad ones. So I really think that these types of festivals and events that highlight home ownership, the children and the young adults should really pay attention and get involved. And I think this kind of attracts them and gets their interest there.
That's so good. Man, well, thank you so much for coming on today. Thank you for what you do at Stellar, what you've done historically in your role at all the different places you've been. And I think we need more people like yourself who are educated, understand the environment, know where to go to resources, have connected, have the relationships, and so appreciate who you are and kind of what you bring to the equation. And you're a small part of the affordable housing in Houston. So,
happy to be here.
How can people get more information about you and the bank?
Oh, awesome. Yeah. So if you want any information about Stellar Bank, you can go to our website, www.stellar.bank. .bank, so it's a little different. You don't have the .com there. And then you can reach out to me. You can go to the bank's website, reach out to customer service, have them contact me, or you can email me directly. I'm at Marcus, marcus.vazquez@stellar.bank. Find me on LinkedIn, social media.
And we'll put all your information in the description. So
we're active. We're out there in the community. We're trying to do the right thing. So.
You and Demetrius are the power team, man.
Hey, man, we get out there, man.
I see y'all at all the events, and it's really cool.
It's the holidays too, right? So, like I said, we just picked up a couple hundred turkeys, and we're gonna help sponsor the big Thanksgiving event at the George R. Brown coming up. And I just love this time of year, to make some families happy, see some children smile, and just enjoy it. So, appreciate this opportunity.
Awesome. Thanks, man.
Thanks. Appreciate you.
All right. Well, thank you for watching the episode today. Go ahead and hit that subscribe button so that you don't miss any conversations that we're doing here on the Promise of Place podcast for Avenue CDC. Hit a like for us, and we'll see you in the next episode.